Several organizations have sought to operate as the cryptocurrency equivalent of a bank in recent years, offering high returns to users who deposited Bitcoin or other digital assets. Almost all of the largest of those enterprises have collapsed catastrophically in less than a year. Genesis entered Chapter 11 bankruptcy just the other day, following Voyager Digital, Celcius, and BlockFi on the list of organizations that have either filed for bankruptcy or gone out of business. Finance Doc brings you a detailed report on the crypto exchanges who acted as banks and later collapsed like Dominoes. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. So, watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. This sector of the business evolved as crypto enthusiasts wanted to establish their own parallel financial universe free of traditional banks and government-issued currencies. However, in the absence of regulations and a government backup, many enterprises crashed in a domino-like pattern. What started with one crypto company failing in May spread to another crypto lending firm, and then another. Furthermore, government officials began restricting the ability of crypto loan organizations to promote their services, claiming that their goods should have been regulated by securities regulators. The collapse is similar to, but on a far lesser scale than, the 2008 financial crisis. There are no concerns that the failure of these crypto companies will have an influence on the larger economy. Voyager, Genesis, and BlockFi were attempting to accomplish what banks do in traditional finance: accept crypto deposits, pay depositors a dividend on their held crypto, and then issue loans to generate a profit. It's the same thing the banking sector has been doing for hundreds of years, but with government-backed currencies. The lack of protections is the most serious disadvantage of crypto financing. There is no deposit insurance, no government safety net, and no privately owned body to safeguard depositors if their crypto bank fails. This was good while cryptocurrency values were rising, since the collateral banks accepted in return for loans was increasing in value. Firms were ready to offer a 10% or higher yield on depositors' crypto assets since demand for crypto deposits was so strong. However, cryptocurrency prices began to decline and continued to decrease. Bitcoin, for example, fell from more over $65,000 in November 2021 to less than $17,000 last November. As a result, most of the underlying collateral held by these organizations became worth less than the loans they provided, thereby rendering multiple crypto banks bankrupt. Celcius and Voyager Digital were the first two crypto lending businesses to fail. The firms were exposed to both dropping crypto values and problematic loans made to crypto hedge funds such as Three Arrows Capital, which was forced to liquidate and go out of business in June. Another crypto lender, BlockFi, sought help from then crypto powerhouse FTX and its creator, Sam Bankman-Fried. Bankman-Fried provided financial support to BlockFi, one of numerous actions that garnered Bankman-Fried praise as a rescuer or financial backup for the crypto business. However, BlockFi's financial lifeline was severed when FTX declared bankruptcy in November due to high-risk loans to its linked hedge fund Alameda Research. BlockFi's own insolvency became unavoidable. Genesis made billions in loans to Alameda, demonstrating how linked these crypto lenders have become. With bad loans, a lot of these high-tech enterprises suffered a very old phenomenon: depositors demanded their money back, leading to a bank run. What comes next? Tens of thousands of consumers of these crypto loan companies are now waiting to see if their funds can be recovered or found in bankruptcy court, which may take months or even years. More than $900 million in client cash have been frozen at Genesis. It's unclear whether crypto financing will make a comeback anytime soon. Following the failure of FTX, crypto exchange giant Binance announced the creation of its own fund to offer rescue financing for a troubled crypto business, a concept inspired by government-sponsored central banking or deposit insurance. Furthermore, the crypto business appears to be warming to the concept of some form of regulation, which would offer depositors or investors with a minimum of safeguards that do not now exist. There were many measures pending in Congress last year, but with Republicans taking control of the House of Representatives, it's unclear whether the GOP as a whole is interested in regulating the crypto economy. What's your thought about these crypto companies? Share your thoughts in the comment section below. If you have any feedback for us, please let us know in the comments. See you in the next video. Until then, stay safe and keep investing in crypto.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.